All right, guys. Welcome. How are you? Let's do a quick sound check. I want to make sure sound is coming through. Okay. I think it is. All right. Perfect. Let's start now. Hey guys, hey Day, hey Curtis. Fantastic. Let's get started then. Guys, welcome to the trading room. My name is Saul. Glad to be with you. Before we get started, please remember, we're gonna be trading live market conditions, so anything I say here is not meant to be buy or sell signal on any instrument. It's just the way I read the markets and I read the charts and I execute trades. And if you follow along, just be responsible for your own trading. Remember, there's latency, involved in this broadcasting. And I just want to show you principles or techniques or something that you can go ahead and apply to your own situation afterwards. Okay, so just be responsible for your own trading. With that being said, let's trade a little bit here. I wanna discuss with you a very interesting topic, which is what we're living right now. Let me show this right here. Guys, we're seeing, and if you've been following the dollar index and the markets, you know how the US dollar is getting very, very strong against most currencies, and that there's a lot of implication of that. If you think about it, I don't think there's a lot of people happy with that. Okay, so we have two very strong powers, living together or trying to coexist. And the first one is the fact that the dollar is very, 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 very strong, and that have a lot of implications. First, for everyone in the world which is not living in the US, so they feel, or they start feeling the US dollar more and more expensive. So when they have to buy good or service that it's quoted on US dollars, they will think twice. Okay, now you can apply that for everything. Okay, so that applies also for gold, and that apply also for US stocks. So if we see the correlation, if we try to understand the correlation between a strong dollar and why the US market is not performing the best, that is one of the factors. Okay, the fact that non-US citizens, okay, or non-US dollar holders, they will think twice before buying a US stock, because now for everyone who's not living in the US or not earning in US dollars, they feel more expensive buying US stocks. Okay, if that makes sense. So might be cheaper, okay, or for them to go and buy Japanese stocks or European stocks or German stocks, okay, which are good as well. And for the same amount of euros or Japanese yen or whatever, they can get more stocks, okay, than moving that money into the US dollar and then buying US stocks. So we can see the correlation. Now, second, there's a huge amount of debt, world debt, quote, in US dollars, okay, a lot of countries that they owe debt to countries or to America, to the US, that it's quoted in US dollars. So now that those countries will have to work harder in order to pay that debt back. And in the other hand, okay, or the other power, okay, or the other aspect that is influencing all this economy and the markets is the inflation in the US. Okay, we saw the reports, the CPI reports last week. They weren't great. Okay, the inflation is there, inflation is kicking in. So the Fed will keep increasing interest rates in order to stop or try to slow down the inflation in the US. So when as long as they keep saying we're going to increase interest rates, that brings more interest in money, bringing money into US dollars, because that will give them interest and appreciation on their money. So in one hand, a lot of people are, we have this fight to fight inflation, but also to don't get the dollar very, very strong, because that has a lot of world economy implication and also US economy implications. Okay, no one is happy with that situation. With that, and maybe that's why, if we see the euro US dollar, where is right now, okay, we see, okay, we're in, trading around that area, okay, where everyone knows if we break this area right there, that demand, okay, this is from 2002, we might run, okay, a lot of pips, okay, down to a cheaper and cheaper euro dollar exchange, and that will have a lot of implications. So I think there will be a lot of efforts on keeping the euro USD price above that area, okay, above the parity levels. And we heard today earlier that in Europe they will start also increasing interest rates, and that's part of why are we seeing this huge rally of the euro against most currencies, including the US dollar. So the trend is still down, okay. The trend is bearish, okay. But when I go intraday and I wanna do some intraday trading or short-term trading, I have a daily bias, okay. My bias is to the long side. We are, okay, and look how this rally stopped right at the supply, okay. We're right there. We're now at the point that we have to decide, okay, or the market needs to decide, are we breaking this lower or we continue higher? If we break higher, we might find ourselves all the way to either those levels or to the supply, which is all the way to the tops. So now if I decide to go long, and actually let's start building a little bit, bit late. Okay, I didn't mean to do 2 lots, but we'll go with 2 lots, that's fine. Let me bring a little indicator here. Okay. So going back to the analysis. So we have the supply. So right now we're going to either break, okay, we're going to pull back to try to retest the highs, and probably to retest the highs and potentially break the supply area, okay, to a higher level, depending on how the market will receive that announcement of Europe increasing interest rates, or we're going to pull back lower. So with that analysis made, I didn't get the best entry price, and I went a little bit heavier for my first entries. I prefer to break my entries than going heavy. But around that area, and if I go with more detail, I think my stops, they need to be around there. Okay, so if everything starts failing, I will decrease this a little bit. Okay. So I will maintain my bullish bias as long as we stay above that line there. So I will build, there's a support here. You can see one where we might be reacting to that support. So I will be, okay, we'll see if we get continuation to the low side. And if not, we have some area of interest down here. So I might add a little bit here and down here, maybe a little bit more, and then I'll close everything down here. Okay, that's my plan. Yeah, you're right on Holly. I don't know what time frame are you're looking for. I'm still very, if this goes against, that's a bit too much. Okay, let me see. Okay, one lot is good for starting, because now if it goes against me, then I'm happy adding, okay, more. I don't want to go my first entry with 2 lots unless I bring my stop closer, but leaving it there and going with 2 lots, that's a lot of risk. It is 30 pips of risk. So I don't know what time frame you're looking for. In the 5-minute chart, we have this, we already have this pullback here. Okay, we had a compression right here. We had a nice divergence. We have the pullback. So now that might be the pullback. On the hourlies, you're right. On the hourlies, we haven't had a deep enough pullback. But sometimes pullbacks are in a sideways movement and not in a price movement. In a time and not in price. So market just goes sideways and then continues to the upside. Yeah, so now where in the hourlies there's room for more pullback. So we have a nice area there, just where my stops are. That's a good buying opportunity. Or we have the demand down there. So on the hourlies, I will be bullish bias as long as we stay above that area, but I cannot go long right now and hold that position all the way to the demand, because it's very, very, that's 100 points, so that's a lot of risk. So if things go wrong, I will close and then I will readapt if the trade goes against me. But in the meantime, let's see if we can run a little bit. Let's go to the 1-minute chart. Let's see what we have. Let's see. I should expect, and now on the 1-minute chart, this is a bit overextended, so I expect some reaction to this level. We might have a pullback, but then this looks strong. Looks good for my trade. So even on a pullback, okay, I need to be prepared for a pullback and then continuation higher. And if we break that, then we have a bit more there. So we'll get some resistance there, but other than that, we have nothing here. Okay, we had compression here, so there will be no supply in that area, and then we might go all the way to the highs. So I'm happy with my position. Wasn't best entry price. Okay, an ideal entry would have been a bit lower, but now if I get a pullback, I will have the opportunity to add. Okay, to add to my position. And now at this point, now it makes sense to bring my stop, to a higher level. And once we establish a pullback, and then a continuation, okay, if we establish something like that, then I will bring my stop below that new pivot point. Okay, that will be the trade management. But right now I cannot bring my stop loss to break even, because I need to give the market the space, the room to go and do, it's normal volatility. But this on the 1-minute chart is a nice Quasimodo pattern, so we're forming lower lows and lower highs, and now that's the first time we break this high. Okay, so we're forming now for the first time this high will be higher than previous one, okay, than that one there. So now I need to we need to establish a new low and then continuation higher. So let's see how that evolves. Now on the dailies, let's clean a little bit. On the dailies, the trend is still intact. Okay, we need to establish that same pattern, okay, of breaking the previous high. We need to establish it on the dailies. Now on the dailies, the high is all the way here. So as long as we don't break those levels, technically the trend is still bearish. Okay, so on the dailies, we need to see a pullback and then a continuation higher, something like that. Like to establish a high, then a low, and then to break that previous high. We haven't done that. Okay, so I hope that makes sense, guys. How we try to, you know, try to take everything into perspective. I think it's historical and fascinating what we're living. Okay, and the fact that we have all the efforts to stop inflation, therefore increasing interest rates, therefore strengthening the US dollar. On the other hand, the world economy doesn't want, and US economy doesn't want a very strong dollar, because there's a lot of impact on the economy, US economy and world economy. So so we have that little war going. Okay, let me peel off a little bit, and then if I get the pullback, then I'll buy again. But I wanna make some money in the process. How do I see USD JPY for sales? I haven't seen it. Let's see. I don't know what time frame you're looking for, but if you're on the dailies, it's always hard to explain in words what I'm trying to say now. But you can go short right now, and as long as you're clear when you want to stop that short position, you're fine, because the trend is clearly up, but it is overextended. So a pullback is coming. Okay, so the pullback might be there and might stop there and reverse, or might go lower and then reverse. So it's not the best entry point because we've missed already 3 days of price action, but it's fine to be a short and then, you know, placing your stop above. I guess if we go to lower time frames, we should see a key level present there, you know, causing this to stop. So as long as you're clear where would you go out in case it goes against you, and we're going to take profits, because that's another tricky one. You can go short. Okay, so if I was going to go short, I would short, and I think I wouldn't, you know, around that area I will want to take profits, because at that area, or probably that area, we might see, you know, a next leg to the high, and that would be a nice reward if you short. You know, stop is there. You have a 2-to-1 reward. I don't see much here. There's no much demand. We had a compression there. So if it breaks and gains momentum to the low side, should break that area and go all the way to those levels. But I wouldn't build right now, or I wouldn't trust on this just flying lower and lower, because the trend is clearly there. Yeah. And by the way, my other account, I passed it already. Let me see if I can find the account. I'll show you. So on the account that we were, just following for long-term setups and long-term opportunities, we're following the account almost all set up together. So it's here. And it's passed, and nice performance factor. I almost didn't make it on my winning factor, but I made it at the end. Yeah, so I'm happy. So that's it. That was a nice process. I traded for months, and this was fun just to see the progress on long-term setups, and happy about the progress. Hey Lucian, how you doing? Yeah, so I guess that was the pullback I was looking for. So I missed my adding. I was looking at other charts, and I'm not sure I was able to. I was expecting this bit lower, to a bit lower. So even if I was in front of the charts, I'm not sure I would have been able to add to that point. But once you have a pivot point like that, and that's what I just told you, now it makes sense, to trail your stop loss, okay? Because now we have a key point formed. If this breaks up, that might be a tiny, key support there to break your stops. But it's very important to wait, okay, to be patient for the market to establish a new pivot point, and then to trail your stops, okay, and not racing to do that. Yeah, same here, Lucian. Yeah, performance factor was quite high. Again, as long as you keep your risk fixed, you can make nice factors and nice performance. Okay, there you go. So let's break. We said we might break. Okay, we broke previous one. Okay, we reacted to this resistance reaction. Okay, and we said we will stop. Okay, we have that one right there. So we can see live reaction to that area. Okay, there were sellers once interested in pushing the market low, so they might be there, still there. So that's also a good, taking profits area. Okay, because from here we might see the market all the way down. So I already took profits for this trade, so I'm fine. Just this trade, it's $50 up, so I'm happy to see if we can break that area and continue, because now if we break, I told you there's nothing there. If we break this area, we should see the market going all the way to the tops. So around there. Lucian, how much do I usually risk? It really depends on the setup I have. So, and I have my long-term setups and I have my active trading. So on my active trading, I am more flexible with how much I'm willing to risk. So sometimes goes from 0.1 to, I don't know, to even 3 or 4%, because those are, no, 3 or 4, that's quite a lot, but maybe 2%, because those are really, you know, short-term setups, and I might be risking, you know, 0.1, 0.1, 0.1, but I make that again and again and again and again, and I that sums up for, you know, for 1% or whatever on a trading session. But on my long-term setups, where I have more time, you know, to really measure to the pip and do everything, then from 0.5% all the way to 2% per trade. And if you have been following me, you know I most of the times I break my entries. So probably if I'm going to be scaling into a trade, then I scale in, you know, my first entry is 0.5, and then my second one might be another 0.5, and then another extra 1%, and that's a whole 2% for a long-term setup. But those are, you know, weekly setups. Are setups that take time to develop. Okay, so we're reacting to resistance. Now let's see if there's something left here. Okay, so supply is checked, or resistance is checked. Let's see if there's some buyers left here, and if we can turn and establish a higher low. No, so Lucian, in my short-term setups, I scale in much more than in my long-term ones. So okay, let's take profit here. So that was a $81 trade. So let's move on for the next setup. Yeah, so my long-term setups I also scale in. Okay, so right now, for example, let's just take this chart right here. Okay, so if I want to go long, then maybe right there that would be my first entry, and then I would add around there, and maybe that's it. So that's 2 entries. Okay, just hypothetically. So I scale in, but in these short-term setups, then I will go maybe 0.5. I don't know, let's say half lot, or 0.225 of the account, and then another 0.5% or 0.75%, depending on how much you want to risk on the whole setup. Okay, let me see if anything has changed. Okay, now I wanna wait here, because on the long term, okay, longer term, okay, in the 5-minute chart, which is my setup chart, if this turns down, that might be a whole. If this turns lower, then this movement that failed to go to the, you know, to the highs, and just being arranged and potentially continuing higher, is now potentially turning into a reversal pattern on the 5-minute chart. Okay, that might turn into a head and shoulders or whatever. It will establish a lower high this one being lower than that one, and that might be a potential reversal pattern on a 5-minute chart. So on my 1-minute chart, I want to be mindful of that. So let's watch and see how that moves. Yeah, just no worries, guys. Just, you know, keep coming, and I'm sure you will learn a thing or two. Okay, well, wait, let's see if there's another setup. Yeah, it's not a great moment to trade, because I'm right at the middle of the range. So if I start going short, I need my stops up and my targets down. And if I start going down long, then my stops would be down here and my targets up. So my risk and rewards aren't that great. So I really need this to go either higher, and then maybe I will start shorting, or this to come lower and then to start buying. And pound dollar, pretty much the same. The rally on the pound wasn't as clean. Okay, I like it more on the 5-minute chart. Okay, you see we have, you know, we have intermediate, like middle range demands being created, while on the pound there's a lot of choppy up and down movement, not very clear movement up, and then a lot of choppy, you know, up and down movement. So I'm on hold on that. I don't like it very much. And let's see what's in here. Let me look for more charts. Let's see if we find something. Yeah, the pound one is a nice one. No, pound. Aussie is a nice one, because look at this channel. Okay, there's that was a compression, and I believe we discussed that in one of our classes here, and also on the Kiwi. I remember we talked about there will be no supply here, so this movement high will be breaking all this channel. All supply here has been tested already, so we should be seeing this movement all the way to these levels, around that area. So let's see if on the 5-minute charts I need to go long, but I'm at the very worst place to go long, because I'm at the very tops. So I need this to pull back to go long, or to maybe try to catch the breakout. Yeah, but this is a nice chart. So we started the session with really nice movements, and now we're just moving sideways. let's see if this. So look how we established here lower high, but we're now establishing a higher low. So we're really pressing, and it's not a great area to do anything. I really need this to break out of the range, so I can do anything. No, I sound induces. I'm not using AUD to my bias on for the euro. I think all we're seeing now is a dollar movement. So the dollar is kind of weakening against, intraday weakening against the currencies. So my bias is the same for Aussie and euro. I guess my bias is the same for dollar. So I'm just trying to find now a setup that it's more worth in the probably more worth in the taking in the Aussie than in the euro. That's it. But my bias is the same for both one. So my bias is the same. I'm just seeing how on the Aussie we did go to the highs. We're pressing to the highs. You see how we kind of have the same movement, but now this leg higher went all the way to highs, to previous highs. So it's pressing that area and probably breaking to the high side. And the euro, we failed to go to the highs. Okay, on this leg higher, we just stopped there. And we're not kind of moving sideways. So this movement is weaker than this movement. But it's all if everything's going to be a dollar movement, then I can kind of establish, okay, we have more room to go to the upside here anyways. But if we're going to break that level, then I'm more interested in trading this breakout than this breakout, because this breakout will end here somewhere, and this breakout has it's a major level. That's a key level. So if it breaks, I want to be there on the break. So for breakouts, just the way I trade a breakout. So let's just oops. So we can go with buy stops. I can place a buy stop, and a buy stop gives me confirmation, correct? Because it will not trigger me in unless the break happens. The problem with this is the amount of false breakouts we have, and especially in the Forex market, you know how common those are. So we kind of gain, we get a good confirmation because we are only getting when the breakout is happening, but a lot of times it just turns into a false breakout. And the other way to trade, which is my favorite one, is to wait and see the breakout, to actually see, to gain confirmation, okay, to see that the breaking area becomes a new demand area, okay, a new key area, and then waiting for a retest of that demand area, and then joining, okay, and then buying after the pullback. Start buying after a pullback. So that's my preferred way. The downside of that is that when it's a true breakout, it might just run without you. Okay, it might never go back or it might take very, very long to go back and retest the area, and you might just stay out of the trade. So in this case, if I go with a buy stop, my stop loss would be there. That would be my setup, and that's that's only a 7 pip risk distance, so I can go up. I can go a bit more heavy with this trade. So I'll keep an eye open. And here we're not moving anywhere. Yeah, so that's a good comment. The fact that AUD went, if this is going to break to the highs, Euro is going most likely break this area and then go all the way to these highs. But the fact that the Aussie went already to the highs doesn't mean the Euro is going there. Okay, but right now, a break of these levels on the on Aussie will represent a break of these levels on Euro. That's it. Dollar CAD. Clean. Yeah, dollar CAD does not have the clear trend I see in other currencies. So not on the dailies. Okay, we see more a channel. So we don't have the clear trend. And on the 5-minute charts, we're breaking this range right there. Okay, so we're breaking the range, but just to meet demand down here. So expect reaction to that area, and if that breaks, expect reaction to that area. So if you short it there, then you have a potential target there, and if you want to swing it, potential target there. I don't know if it is going lower than that. Really wants to break, huh? It is pushing. You see how we're kind of pressing to that line. See if we have any news or something, because volatility was very, very nice during the whole day, and now it's kind of leaving, so no news ahead. Okay, let's see if we can break now. Okay, now let's watch live if we are going to break or false break. Yeah, I can feel the pressure to the upside. You can see how we're, buyers are coming into the market at a higher price every time. Let's see if we can establish the breakout. Let's throw. Place a buy stop there. Again, if we break that high, we spoke about the fact that there will be no resistance there to stop the breakout. So we're forming that triangle. We attempt to break it, and that was a false breakout. So let's see if buyers come into the market again. I really want to buy. And then my stops will be there. That's a 3 pip risk trade. Just watching and watching. But this rejection, this turning bar, is not coming from any very strong demand. So that's why I'm hesitating on pulling the trigger. Okay, let's take it. I'll take that one off, and that would be my risk. Now let's see if we can break resistance. So we had a little caution from previous win. Let's see if we can make a little bit more. This needs to turn into a kind of fresh demand. So we need to break the resistance. If we break the resistance, we should be in good shape. I expect this going to around that area. Okay, that area right there. Let's see. So that's a 4 pip risk I'm taking to get 11. Let's see if we can make it. Go, price, go. Nice. Now we need follow through. Okay, that's a good one. And we're here. Now this needs to, Aussie one needs to break, okay? Really needs to this needs to become into a new demand. So I really want to see this gaining momentum to the upside. So 1 minute chart here, that looks good. Follow through. Okay, no continuation would be a bad signal for my break. Okay, let's continue a little bit. And now the $1 million question is, should I swing this? Okay, should I get rid of the take profit and just let this go and potentially break the highs and going up and up? But that's, on real time, it's very hard to decide on what to do on those situations, because before breaking these highs, previous highs, we might, go sideways, pull back again, doing a lot of things that it is not a in time perspective, it's not a great thing to do, because I will be holding this for very, very long just to see if it breaks or doesn't break. Okay, so in the meantime, I can actively manage more and more trades. Okay, now I took profits. I mean, it's a nice that was a 6-pick trade or something like that, because we had the break and we had no follow through, and that's what led me to take profits. After, if it's going to be a fundamental break and an important break, I want to see a break and immediate continuation. This really becoming a new key level, and the fact that after the break we just move sideways and now pulling back, that's not a very strong signal. And this is real-time demonstration of another false breakout, at least on the Aussie, which is fine, because the risk I'm taking here is the profit I've made already in the Euro trade. So I'm willing to risk that. But it's no over. Okay, we have this area. Let's see if we have a reaction there, and then a turn. But I'm not very optimistic about this trade. Okay, that was just an experimental trade, and that's another false breakout. Okay, on the Forex market, and that's why many times you want to wait to see the break, confirmation, and then to join. Okay, so overall for today, that was $81 and then $14, and on this trade we're risking $18. So positive day, and it was fun. I mean, as the session started, we had a nice movement, and then we kind of stopped, and now volatility is back. It's back right now. So. So that's it, guys. Thanks for coming and thanks for staying. I think we'll wrap up. Really historical moments we're living. This, this inflation, strong dollar, world economics. It's fascinating times. It's also, on our day basis, not, of course, not great to see inflations and all prices going up, but there's also a lot of opportunities around it. So we'll try to take advantage of those as well. With that, I think we'll wrap up. Nice trading session, nice session, guys. Thanks. We'll see you next week. Bye, guys.